Hong Kong has lost ground to Singapore over the last 3 years and has given free tickets to attract people to visit the country. What measure is Hong Kong taking to stay in competition with Singapore? We're going to discuss this today. What's up, guys? If you're one of those who have applied for the 12,500 free tickets from Singapore to Hong Kong, I hope you got the tickets. I heard that 80,000 people were in the queue at one point, and the launch ended within 45 minutes. While Hong Kong is panicking, for the first time in 24 years since 1998, Singapore surpassed Hong Kong in terms of air traffic last year. Since January last year, more flights have arrived in Singapore than in Hong Kong. So Hong Kong was desperate to attract visitors to the country that it decided to give away 500,000 free tickets worth a massive 2 billion Hong Kong dollars. You might think Hong Kong is losing visitors due to the lockdown. You are right, as Singapore opened its border earlier than Hong Kong in May last year. But the other critical reason is due to the labour shortage in Hong Kong. You will recall the massive protest by Hong Kongers in 2019 against the Beijing authorities who imposed the national security law in 2020. The law decrees that any Hong Konger can be extradited to mainland China to face prosecution. After enjoying many years of democracy under British rule, Hong Kongers are afraid of the Chinese authoritarian regime and the uncertain political environment. Many Hong Kongers left the country, and expats have left too. Hong Kong has lost 5% of its working population over the past 3 years to 3.8 million. It is not just the airlines that are struggling to find workers. Finance, technology, information and communication, and hospitals have lost professionals and skilled labor too. Listen to this. For the first time last year, Singapore beat Hong Kong to become number 3 in the world's leading financial center, only behind New York and London. Hong Kong came in 4th behind Singapore. Singapore and Hong Kong have been close rivals for the world's leading financial center in Asia for many years. Hong Kong is always ahead of Singapore. Singapore overtook Hong Kong because many investors and financial institutions in Hong Kong moved to Singapore. They are putting money into Singapore. Singapore's foreign currency deposits increased by more than 100 billion since the middle of 2021 as compared to Hong Kong. Home prices in Hong Kong plunged about 15% last year, the biggest drop since the global financial crisis. Investors and financial institutions moved to Singapore because they suffered losses after the CCP crackdown on the tech and other industries in 2021. Jack Ma's IPO of Ant was cancelled after he criticized the CCP in November 2020, causing billions of losses for investors. Many investors also lost money on tech giants after the share prices of Ma's Alibaba and now Bao Fund's China Renaissance plunged following their disappearances. Hong Kong lost nearly 4.7%, or 10,000 professionals, to 204,500 in 2 years in the finance industry alone. BlackRock, the world's largest asset manager, doubled its size in Singapore last year. Financial institutions like Wells Fargo, JP Morgan Chase, Citibank, and Societe Generale moved its Asian hub to Singapore. Many high-net-worth Chinese were spooked into leaving China after the crackdown by CCP. All businesses want a stable regulatory business environment, not the uncertain political and business control by the CCP. Singapore is the best place in Asia to offer a stable business environment. These are all positive for Singapore. Singapore is a small country without any natural resources and needed to attract foreign investments and talent. But rental prices in Singapore have climbed 33.2% for the last 12 months to January this year, the fastest pace in the last 15 years. Rentals in Singapore were 1.5 times more expensive than in Hong Kong at the end of last year. Beside rentals, property prices in Singapore have also gone through the roof and increased by 8.4% last year, after rising for 29 consecutive months. But at what point do the high rentals become unsustainable? Singapore could lose its competitive edge if rental prices continue to increase. Properties could become too expensive if prices keep escalating. With the influx of rich Chinese and money coming into Singapore, Singapore is now raising the bar to attract high-caliber business owners. It wants to attract those who can make a greater economic impact and be more rooted to Singapore. Starting from March, those seeking permanent residency in Singapore via Singapore's Global Investor Program must invest more. They must invest at least 10 million in a business or at least 25 million in an approved GIP fund. Those establishing family offices with assets under management of at least 200 million. And at least 50 million of these assets must be held in Singapore. These businesses will need to hire at least 50% local staff for the incremental employees. Here comes the dilemma. Well, Singapore wants to attract high-caliber investors. Raising the criteria opens the window of opportunity for those who can't qualify to move to Hong Kong. It is also interesting to note that rental volume in Singapore has declined 0.9% in January. In fact, for the past year, rental volume has declined by 15.3%. Property prices in Singapore made a U-turn and declined by 0.6% in January. Property sales volume declined for the fourth straight month in January by 22.6%. Are these signs that the influx of foreigners in Singapore is slowing down? Have people and businesses decided to remain in China as it opens its borders after 3 years of lockdown? What other stops can Hong Kong pull? Green bonds. So far, Singapore has surpassed Hong Kong in green bonds listing and financing. Singapore has listed 2.6 times more green bonds than Hong Kong, at 272 as of September last year. Singapore has granted 2.9 times more green loans of 39.5 billion as compared to Hong Kong. But Hong Kong will have the edge over Singapore by supporting mainland China's carbon goals. China aims for its carbon emissions to peak before 2030 and to become carbon neutral by 2060. Hong Kong could help China by teaming up with the Hong Kong and Shanghai stock exchanges to raise more funds for green finance. In January, Hong Kong successfully issued 5.75 billion green bonds, which is the largest in Asia to date. Hong Kong is heating up the competition. John Lee, Chief Executive of Hong Kong, said Hong Kong will try to attract at least 200 of the world's top family offices to expand operations by the end of 2025. What are family offices? These are wealth management companies set up to manage the assets of the rich individuals who have migrated to Singapore. It is believed that Singapore has more family offices than Hong Kong, estimated at 1,500 as of last year. Hong Kong can certainly make a comeback. Hong Kong is still ahead of Singapore in some financial indicators. At the end of last year, Hong Kong's securities stock market turnover was 17 times higher than Singapore at 3.92 trillion. Hong Kong's security market capitalization was 7.4 times more than Singapore at $4.55 trillion. Hong Kong is definitely heating up its competition with Singapore. Do you think Hong Kong will overtake Singapore as one of the world's largest financial centers this year? If you like our video, please like, subscribe, share, and comment. Thank you for watching.